Hello, this is Patrick. Welcome to Chart Built Wealth, Profitable Investing with Technical Analysis. Well, I wanted to go over my 7 buy recommendations. I haven't been on since I believe it was Wednesday of last week. And the reason is I got a PRP, a platelet-rich plasma injection for a injury that I have. I'm a avid high-level pickleball player playing at the highest amateur level, and I've overdone it. So I'm in a little bit of discomfort, but here we go. I wanted to get this out to you. Nothing's changed. All the ratings are still intact. None of the stops have been hit. But let's cover this. Our leader, the leader of the free world, with all of his announcements and stuff, are adding a lot of volatility in several of our holdings, namely commodities. And so let's go into platinum first. PPLT is the ETF. And, here's where I initiated. This is what we call a bullish wedge. It's a downward sloping uh, structure. And when it breaks out, the thought here is that it goes to a new high. That is, and according to the Elliott wave theory, this is a third wave up. See how explosive that is. Here's our fourth wave. We should have one more higher high to go in platinum before we get a massive correction. But here's where we're at. They did it. I think it was a 10-for-1 or some sort of split. So the buy recommendation was at 1792. We're currently at 1747, and we got our stop at 17. So I'm maintaining that. So we don't have a lot of room here. We're going to see what happens as all the commodity groups are kind of struggling here. So that's pretty straightforward. I'm expecting a new high, which would be, let's call it 27, which would be a very big move if I'm right. So that's where we're at on platinum. Here's natural gas. So natural gas has the potential, I think on the initiation of this back a week ago, the potential upside's over 200%. And we got off to a good, here's where we purchased. Here's a small inverse head and shoulders pattern. Here was the price projection of that, the small pattern, which we hit. There's bigger patterns that are suggesting a huge, huge, huge up move. We had a confluence of moving averages, and UNG fell below that on Friday, which wasn't good. But when I look at nat gas, the actual commodity, it's sitting right on here. So what that is saying to me is if natural gas is up tomorrow, it should go past this previous high. But again, the upside here is really, really, really huge. And so I'm maintaining. I have no stop on this at this point in time, and so maintaining the buy recommendation. Silver, symbol SLB. This looks just like platinum. So we have a bullish fourth wedge, falling wedge, which is suggesting a new high is coming. But we got to hold our stop here at 64. So not a lot of room here, and this has to get going pretty soon. So if you're not in this, or you are in it, you want to buy more. So if this is down tomorrow, you want to buy it as close to 65 or 64 as you can. But you have to have the discipline that if it breaks, then you're going to sell it and get out with a small loss. And if you buy it tomorrow when it's down, your reward to risk is even bigger. So we purchased it at 68.39 and it's at 68.36. So we're kind of even there. GSG. This is the iShares Commodity Index. This is energy heavy. This is 70% in energy. And if you saw last night or today, oil was down, I don't know, 6.5% or so. this evening, it's come back somewhat. It's down about 5%. But what we're looking at right here, here's where, we initiated down here, 43% gain to here. We got out, we bought it back. I don't know, it was 10% lower. So we got out at a higher level and then we bought it back again. We're a little bit out of water. My stop is at 32. Um, I'm expecting a higher high. Um, and the reward to risk potential here is probably the least out of all of my buy recommendations. But there's a potential for this to really explode. And so I'm showing you crude oil. This is not a recommendation, even though this is where I went bullish on oil, which was pretty much the low. Here's where I went neutral. And then I got out and I said, this is really overbought. Actually hitting 90, which you don't see very often. So everybody wanted to buy oil at that point. I got out. I said I wouldn't be surprised to see this consolidate for several weeks because in the Elliott wave scheme of things, we're expecting a 5 wave advance and we got one, two, three, a big fourth wave triangle. And then we get one more push to a higher high. And if you measure the base of this triangle and project that distance upward, you would get approximately 40 points higher. So it'd be like $147, which would be a new time high, all-time high going back to 2008 when it was at 140, I believe. I got that right. So anyway, this consolidation has happened. This is when I went bullish on GSG. But because it has things like agricultural and some of those things in it, I think it's about 20% in agricultural commodities and it has some metals and other things. GSG is not down very much compared to oil from when I purchased GSG and suggested that oil was going to start to rise again. So GSG could have a lot more potential, even though it doesn't look like it on the chart that I showed you. I hope that makes sense. Here's Caesar's Entertainment, the casino. This is the potential of a pretty big inverse head and shoulders pattern, about a year and a half, I would say intermediate in size. And here's where we purchased. We had a confluence of moving averages on the right shoulder here. So this is the left shoulder. Here's the head. It's forming a right shoulder. If you can get above, let's call it 31, you measure from the bottom of the head to the neckline and you come up with 47.5, which is about a 70% advance. So I like this. My stop is at 24. So, it's quite a bit of risk at this point. I'm going to be moving that stop up closer to, well, actually, that's all I can do. I was 24. So that's where we're at on Caesars, a lot of potential upside. And Sprout, here's another common stock, Sprout Supermarkets. Again, we got an inverse head and shoulders pattern, just about the same size actually as Caesars. And we got the left shoulder, the head, the right shoulder, the neckline. It broke out. We got a big gap here, so I'd expect to see that close at a minimum. But our price projection is 105, and we're currently at, let's call it 87. So still a lot of upside potential there. I've raised my stop a couple of times from here's where we got involved in it. So we're already up quite a bit. This was the initial stop. I raised it to here to 78, let's call it. Now I'm up to 82.5. So we got a gain locked in. I like that, but there's a lot of upside here potentially. Union Pacific, symbol UNP, massive pattern here. 1, 2, 3.5 years, symmetrical triangle, two converging trend lines. We broke out. Here's where we broke out. I waited for it to come back. We purchased it on the comeback. I didn't chase. And then after it fell farther, when it on its way up, I purchased that, and here we go. And so there's still good upside left. I got my stop at 260. So we're going to be in the money, and that's good. I just remembered I forgot one. Antero Resources. We're still on a buy recommendation with that, and which is goes hand in hand with natural gas. So those are the buy recommendations. Are still all thankfully still intact. So thank you for watching Chart Built Wealth, Profitable Investing with Technical Analysis. Please like and subscribe. Tell your friends and neighbors and family, and uh, have a have a good Tuesday tomorrow. You have a short week. Adios.